All right, guys, I'm gonna go ahead and do a quick little trade recap for the one trade that I took today on gold. Ended up resulting in a loss, which is totally fine. Just landed on the wrong side of probability. I had all the confirmations I needed on this trade, however, did learn some new things after speaking with my mentor. So we'll go ahead and dive right in. Right. So first off, what I was already paying attention to on the higher time frame was that we were extremely bullish. However, once we started making all-time highs, price did start chopping, accumulating, whatever you want to call it. We were just trading in a range over the last couple of days. So it was very obvious to me that, you know, you should be shorting the highs and buying the lows. However, I was also keeping in mind that we were overall extremely bullish, as you guys can see here on the higher time frame, just making higher highs and higher lows. At the time of entry, on the 1 hour time frame, we had a previous 1 hour bullish candle close. So with the candle behavior theory, the idea is that you see price on the next candle create that bottom wick to then flip and continue higher. Same thing with the 30-minute. We had a previous bullish candle close, so I was looking to see price create that bottom wick to then flip and continue higher up into this first key level of mine, and then this second one being my final target. 15-minute, we did close bearish, so that was moving against us, and we had a level being created during or as we got into the trade. So this was something that I was keeping in mind that was going against us. However, at the time of entry, we had very solid confirmations to take this. The overall 5-minute trend was continuing higher. We were getting A2 closes, making higher highs and higher lows. So once we got that pullback and then we had a very strong bullish engulfing candle, I was looking for buys. Just simple as that. So then on the 1 minute, after we saw 750 open, which was when the new 5-minute candle opened, at this time we had the 15-minute candle just print bearish within the first 5 minutes. So what was going against us was that price was creating that top wick on the 15 to then flip and continue lower. Totally fine. We already have right here 4 confluences moving in our favor. We're following the overall time frame trend. We have a little shift in structure, which we call 83 setup. The 5-minute A1, which closed from bearish to bullish. 30-minute closing bullish, looking for that bottom wick to be created to then flip and continue higher for that range. Hourly already creating that candle flip, so now we're just looking for a continuation higher. So as of right now, at this time of trade, we had the 1 and 5-minute aligned. The 5 and 15 were not aligned in terms of candle behavior. However, direction was moving in our favor. We have 4 confluences in a row, or we have 4 confluences that we can use to take this trade. We are trading into a level, so that was something that I want to keep in mind. It's like, are we trading into a level or are we trading above a level, right? And this should actually be changed. If we're trading above, then I should be looking for an A2 setup, right? Ideally, when you an A2 setup is when you see a candle closure above a previous level so that you can confirm that price action wants to continue higher. So here we were looking for, take this out because we were not trading above, we were trading into a key level. Sweet. Perfect. So as of right now, we have a 63% score for the checklist, which is pretty decent. I'd like to go for something at least above a 50%. It's never going to hit 100% because there are going to be times where if we're trading into a key level, then you're not going to have these 2 checked off. If you're trading beyond a key level, meaning trading above a key level, then these 2 will be checked off. So having at least from a 60 to an 88% checklist is going to be great on my end. With that being said, I took my entry long right here on this little pullback with the anticipation of price flipping. Originally, we do see price moving against me, and at this point, I was kind of keeping an eye on it. And I remember at this point in time when I was recording the video, I was telling myself that within the next 5 minutes, if price does not close above this 15-minute level to create that A2 setup and the 5-minute A2, then I should look to manage my trade. However, during the time after we got the 8 o'clock close, something told me to just hold it and let it play out to see how it plays out, and it does result in a loss, but we will continue going through that. So as of right now, we see the 5-minute is about to push higher. However, we never close above this level, right? This previous 5-minute open close and this 15-minute open close. So we closed below it, still bullish. So we're still technically, we still have this candle as a confluence to continue higher. 15-minute is reacting to this previous level to see price potentially move lower. 30-minute, we're still looking for the anticipation of this candle flip. And at 8 o'clock, we see the 30-minute had closed bearish. 15-minute did close bullish, 5-minute closed bearish. And so here at this point in time, my thought process was to let the trade play out and see if we can get another bullish candle to close above here. However, now in hindsight, I should first, number one, let the trade play out, right? You already executed, you did everything you needed to do, leave it there. You don't need to manage it. You've already accepted the risk. I think that's one thing that I've noticed is that I always look for confirmations as I'm in a trade to see if it'll continue higher, which isn't bad, but at the same time, in order to practice detachment and focus on my state of being, it's important to just execute and just let it go. But if I were to manage this trade, which could have saved me some money, however, I'm going to be approaching trading with the fact that once I take the risk, I fully accepted it. 30-minute close against us, 5-minute close against us, 4-hour close against us. Now we have 3 confluences going against us. I could have looked to maybe trail my stops to here to at least mitigate my risk and then look for another potential entry later on. But I left it at the full stop and we end up getting stopped out. Now, overall, this trade thesis was not wrong, right? Because if we take a look here, price actually ends up hitting my target later on. And so I think for me, for this trade, it just happened to be that I was on the wrong side of probability. I had all the confluences that I need, but more importantly, my state of being, my state of mind was on point. I noticed that there are going to be times where when you take trades, you might not feel aligned. You might not feel aligned with the identity of being a good trader, right? And that happens. And there's sometimes, those are the reasons why you might take some trades where in that moment it looks like a good setup, but then when you journal it after, you're just like, wait, why did I actually take this setup? It's because our minds perceive reality different when we're operating in different mindsets, right? If I'm operating a very scarce mindset, I'm going to think every little setup is a potential opportunity because I'm operating in survival. I'm operating in scarcity, thinking that there's not going to be a better setup, right? That's the wrong mindset to have. That's why it's very important to check your state of being and see, look, am I operating from a state of patience and abundance, knowing that I'm waiting for the best opportunity? Or am I operating from a state of being where I'm trying to make my money back so that my P&L is green? So that when I take this trade, like it has to win. You know, those are 2 very different mindsets, and that will help. That will change your perception of the markets very differently, right? You're going to see setups that you think you might have taken when it was a high quality setup in that moment, but because you're operating in a survival mindset, scarcity mindset, you think it looks like it, but when you go back to journal, you're just like, wait, why did I even take this, right? It didn't look good. But when you align your state of being and you align your setup to be on point and to be executed to its fullest potential and to its highest capability, that's when it's a great trade, right? That's something I've learned. It's like, just because it's a good setup doesn't mean it is a good setup, right? Because if your mindset and state of being is not aligned, that means your perception could be off. And when you have a perception that is not in alignment with the true identity that you are, which is being a profitable trader, then you're going to see things that other people are not going to see. You're going to see setups that maybe a higher profitable version of you won't see. So it's very important to have that in your checklist, is when you take the trade, when you see a potential setup, what is your mindset like, right? Because like I said, if it's not aligned, it might be a bad setup and you won't know it because your brain is very good at playing tricks with your head. Like, you have to realize that. So with that being said, that's the one trade I took for the day. I was debating on staying and potentially watching the markets, but after seeing it hit target, I was like, you know what? I'm going to call it a day. I want to preserve my identity. I want to make sure that the next trading day I can come into the markets with the same clear state of being, state of mind, and execute flawlessly. I have now added that into my checklist to make it an A+ setup. It's, where's my state? Like, how am I acting? Do I feel great? If I feel like a confident trader, then I'm gonna take the trades, right? Utilizing ChatGPT is super important for me now. I've been using it. I've actually prompted the AI to become like my psychology coach so that when I enter and exit these trades, it has me go through all these questions to make sure that I am operating in the right state of being. Because I know I have a strategy that works. That when I backtest these results, I have a good win rate. But the reason why you can't translate that into real life is because your identity is extremely different, right? With that being said, I'm going to end it here. There's so much more I'd love to go on, but that's just going to be the trade review. We'll go ahead and create another video for that later. But other than that, I will see you guys tomorrow.